Hi, my name is Olivia Byanyima. I'm a partner at Nordic Impact Funds. We are an impact investment fund that invests in East Africa. We invest in agriculture and financial inclusion. So our decisions are less about what's in the deck and more about what's behind it, what we see behind it, the founder, the quality of the founder, the numbers, and how real the business actually is. So the things that would make me write a $500,000 check or more is one, founder quality. We look for coachable founders who are self-aware, who are obsessed with solving the problem, right? Not just raising money. The second thing would be the economics. They don't need to be perfect, right? The unit economics. They don't need to be perfect, but you have to show evidence that each transaction makes money. And I guess the third one is evidence of pull. So customers choosing them repeatedly, not just one-off transactions or traction. So at this stage, I'm not betting on perfection, I'm betting on trajectory. Traction is really not about size, right? It's not really about absolute size. It's more about the quality and the consistency of that traction. For us, that typically looks like, we end up, investing at about $500K, $1 million in revenue, depending on the model. But we also look for repeat customers for strong retention, right? And a clear understanding of cost versus revenue for each unit. But honestly, I've seen companies with lower revenue get funded. If they deeply understand their economics and customer behavior, and they can prove that, that's what gets you funded, right? The quality of the founder is big. So an uncoachable founder is always a no-no. And what does that look like? It could mean a bit defensive, a bit overconfident, not listening, not aware of their weaknesses or the weaknesses in the business model. That's always a no. And if you have no clarity on your unit economics, basically, if you don't know how you're going to make money, we're not going to be in that deal. And where there's no real market pull, right? So you find sometimes a founder is pushing a product instead of solving a real problem. Those are the quick no's, right? And of course, there's fit, right? Are you a fit for our mandate? So the things that help is when a founder is honest about weaknesses about their own capabilities, weaknesses in the team, weaknesses in the business model, right? That's always a big plus. Another one is when they know their numbers cold. They can tell you how they make money. This is how I make money. This is how much working capital I need. This is what I'm going to use this money for, right? And I know my numbers. I know that once I pull in this amount, I can expand my margins by this much. Like knowing your numbers cold. And then, of course, just generally following up quickly and thoughtfully and being, humble. What makes us pull back is sometimes, you see something that's overpolished, but it's shallow, right? It sounds good, but it's shallow. Or founder kind of avoids the tough questions and kind of deflects it, rather than saying, you know what, I don't know, and following up the next day with, okay, now I have a better understanding. That's always much better. Another one, sometimes you find founders that treat fundraising like storytelling, but it's really about problem solving. So the best founders, they're trying to impress you, but they're also, you can tell that they're trying to build with you.